Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the boring corporate papers so you don't have to prepare yourselves, because we're about to dive into Cabot Corporation's latest filing and see if their recent results are giving us a reason to celebrate or a reason to run for the hills. Before we dive in, if you are already excited about decoding corporate secrets with us, hit that subscribe button and ring the bell. Also, we've got a fantastic community brewing on Discord all about digging into these filings and sharing insights, so make sure you join us there. The link is in the description. Alright, so here it is, the 3rd of February 2026. Cabot Corporation is giving us a peek behind the curtain on their performance up to the 31st of December 2025. Think of this like getting your quarterly report card from the business world. Now, Cabot Corporation, an established player in the chemical industry, is letting us know how they've been doing. They're in the business of making materials that go into a lot of everyday things like tires, inks, and even batteries. So when they give us an update, it's worth paying attention to how those industries are doing. They're listed on the New York Stock Exchange under the ticker, you probably know, CBT. That means their stock performance is a big deal for many investors, and what happens with their results can directly impact those on the stock market. The main reason they're filing this report today is to share the news about their operating results for the fiscal quarter that wrapped up at the end of December 2025. Think of this as the official announcement of how much money they made and what it cost them to make it during that period. They've actually included a press release here, which is pretty standard. This is usually where they highlight the numbers they want investors to see and spin the story the way they want it told. We'll dig into those numbers ourselves to see if the story holds up. Now, the really juicy stuff typically comes in the financial section, but for this particular filing, they've bundled it all into a press release. So what we're looking at is essentially the executive summary of their financial health for the last quarter. They're telling us about their results of operations and their financial condition, essentially how much they earned and what they own and owe. Let's look at the key numbers they've shared. They reported their operating results for the fiscal quarter, ended the 31st of December 2025. While the detailed financials aren't embedded directly in this particular form, they've attached a press release which serves as the primary disclosure for these results. We're going to focus on what the attached press release Exhibit 99.1 conveys, as that is the core financial information being reported. This exhibit would normally contain details on revenue, gross profit, operating income, net income, and earnings per S-Hair, along with comparisons to previous periods. Considering the nature of this filing, which is an 8K specifically for announcing results of operations, we can infer the press release has detailed figures. For example, we look for revenue growth or decline. If revenue dropped, say, by 10%, it means for every $10 they used to make, they are now only making $9. That's a significant signal about demand for their products or their ability to compete. We also look at profit margins. If their gross profit margin shrinks, it means it's costing them more to produce their goods or they're having to sell them for less. This is a direct hit to their bottom line and a key indicator of efficiency and pricing power. Another crucial area is operating income. This tells us how profitable their core business operations are before considering interest and taxes. A decline here would suggest operational challenges or increased costs in running the business day to day. Finally, net income or earnings per S-Hair is the ultimate measure of profitability. If earnings per share are down, even if revenue is up, it could mean rising interest expenses, higher taxes, or other non-operating costs are eating into their profits. Without the direct numbers from the press release in front of us, we have to extrapolate based on what an 8K filing for results of operations generally contains. If Cabot Corporation is reporting strong earnings and revenue growth, it indicates a healthy business that is effectively navigating the market. Conversely, a dip in these key metrics might signal headwinds such as increased competition, rising raw material costs, or a slowdown in the industries they serve. The attached press release is the critical document to analyze these trends. Let's imagine the press release highlights a couple of things. Perhaps they've seen a significant jump in revenue for their specialty carbon segment, which is used in advanced batteries. This would be fantastic news pointing towards a strong future in the electric vehicle market. On the other hand, they might be reporting a slight decrease in earnings from their performance chemicals due to higher energy costs impacting their manufacturing facilities. This is a risk factor that investors need to monitor. How well can they pass these increased costs onto their customers or find efficiencies? The story here is about how Cabot is managing its diverse portfolio in a dynamic global economy. Are they capitalizing on growth areas like sustainable materials and electric mobility, while mitigating risks from traditional sectors or supply chain disruptions? We will need to check the press release for specific numbers to confirm this. Overall, Cabot Corporation's financial health is about balancing innovation and cost management. The filing's main purpose is to showcase this balance for investors and stakeholders. Now, looking at the broader picture, Cabot Corporation operates in a competitive landscape. Companies like Michelin and other specialty chemical producers are always vying for market share. Cabot's strategy often involves investing in research and development to create new high-performance materials and focusing on operational efficiency to keep costs down. We need to see if the numbers in their press release reflect success in these areas. For instance, if they are reporting increased R&D spending alongside solid profit growth, it suggests their investments are paying off. However, if R&D is up but profits are stagnant or declining, it might suggest that their innovations are not yet translating into market success, or that competition is too fierce for them to command premium pricing. The trend we look for is sustainable growth and profitability. Are they consistently growing their top line and bottom line year after year? Are they effectively managing their debt, which can be a significant drag on profits if too high the press release they furnished would usually give us those comparative figures to previous quarters or years? A company that consistently beats expectations or shows steady improvement is often a good sign. A notable risk for Cabot could be the volatility of raw material prices, particularly oil and natural gas, which are key inputs for many of their products. Also, geopolitical events can disrupt global supply chains, affecting both their production and their ability to deliver to customers worldwide. The press release might touch upon how they are navigating these external factors. For instance, if they mention successful hedging strategies for commodities or strong inventory management, it shows they are proactively addressing these risks. In conclusion, Cabot Corporation's latest 8K filing is providing us with a snapshot of their financial performance. Based on the typical contents of such a report, they are likely communicating a potentially mixed bag for the quarter ending December 2025. If their specialty segments are booming while traditional ones are stable or showing moderate growth, that would be a positive direction. However, we need to see the specific numbers to make a definitive judgment on their financial strength and strategic execution. Without the actual press release attached to this filing, we are working with the framework of what an 8K reporting results of operations aims to convey. So what is my take based on the typical reporting structure of these filings? Cabot is likely presenting a narrative of resilience and adaptation in a challenging economic environment. They are probably highlighting their strengths in high growth sectors like electrification and sustainability, while acknowledging any pressures from market fluctuations or cost increases. The key will be in the details of that press release. Are the growth numbers robust enough to offset any cost pains? The risks of commodity price volatility and global supply chain instability remain significant, and how effectively they manage these will be crucial for their future performance. Alright, that is our decode of Cabot Corporation's latest update. What are your thoughts on the potential results, and what do they signal for the company's direction? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and make sure you are subscribed for more corporate deep dives. And don't forget to join our Discord community for even more discussions. Thanks for watching, and we'll see you in the next one.